So taxation of cooperative societies other than SACCOs. Taxation of cooperative societies. Taxation of cooperative societies other than SACCOs. So taxation of cooperative societies other than SACCOs, and we say a cooperative society is formed in order to improve the economic welfare of the members. So cooperative society is formed so it is formed to improve the economic welfare of its member. So purposely it is formed to improve the economic welfare of its member. Uh, so they're divided into two. So in taxation uh, of cooperative society, integration of cooperative societies, supposed to be cooperative. Integration of cooperative societies. So they are divided into two. They are divided into two. So we can name them. Number one, we have cooperative societies other than SACCOs. Cooperative societies other than SACCOs. Number B, we have the SACCOs. So in taxation, cooperative society will be categorized into two. One, the cooperative society itself. And number two, the SACCOs. So SACCOs are the service and credit cooperative societies. So service and credit cooperative societies. And then we say for cooperative societies, they are taxed as companies. So they are taxed the same way as companies. The same way as companies, i.e., residential 30%, and non-residential is 37.5%. That's what you need to know. And also you can say so let us start with the taxation of cooperative society. Let us start with the taxation of cooperative societies. Taxation of cooperative societies. And we say number one, members do not save nor get credits. Members do not save nor get credit. So cooperative societies, in most cases, the members do not save their money, and also the members do not get loans from the cooperative societies. But what you need to know is that the cooperative buy goods on behalf of its member. The cooperative buy goods and sell them on behalf of its member. On behalf of its member. So that is their main role. So they buy goods from the farmers and sell them to the customers. So they buy goods and sell them on behalf of the members of the cooperative. Tax payable can be determined using tax payable can be determined using gross profit or net profit method. So you can determine the taxable of this using either net profit or net profit or gross profit method. But remember, the gross profit method is recommended. So gross profit is recommended. Is recommended. But you can use either. You can use either. You can use either of the method. But the gross profit method is the most recommended one. Yeah. Income from trading with members are exempt. Income from trading with members are exempt. So income from trading with members are exempt from taxation from taxation of cooperative societies. Cooperative societies. So remember, any income that the members trade with the societies are exempt. That one is okay. Dividend and bonuses are allowable. Dividends and bonuses are allowable deduction. So apart from any other allowable expense that you know, bonus and dividends will also be categorized as allowable. So that is all about it. That is all about it. Let me see if we can add something else about the cooperative societies. About the cooperatives societies. About the cooperatives society. I think there is no any other thing about it. So we can do a question from our past paper. And I would prefer we go to we do several of them. We can start with the question for which sitting. So we shall start with the one for November 2016. Sorry, no, not November actually. Hii ni kama haina cooperative society. Cooperative. Yeah, we can do two questions here because in our past paper sijaona any question. This one ni ya kitambo sana. So cooperative, that is in our revision partner, revision kit. The question is on page 28. So on page 28. It's on page 28. So you go to page 28. So the question is for, this question is for, you can get in our revision partner, revision kit, that's advanced tax for revision purpose. So that question we shall derive it from page 25, question number 28. It's about questions about Githunguri. Now we have been given the statement, and the statement has our net profit. So the net profit is 73,13,000. That is okay. So we shall use the net profit method because we have the reported profit. So once we have the reported profit, we add back disallowable expense. The first one is depreciation. Now from the question wametuandikia pale expenses pale juu tukianza, less expenditure 125,000. That 125 is supposed to be depreciation expense. So ameandika the word expenditure, but it's supposed to be expenditure for, so it's supposed to be depreciation. Then you pay legal fees 82,000, that's allowable. Repair and maintenance allowable 200,000. Education for workshop for members allowable. Cooperative selling allowance allowable. Not depreciation, that's supposed to be interest on overdraft 60,000. So interest on overdraft 60,000. Then you have purchase of stationery. Stationery, those are things like pens, blah blah blah. Those are allowable allowable expense. Dividends 10,000, that's allowable. We say dividend and bonuses are allowable. Income tax paid 800,000. The hiyo hapo. So income tax 800,000. License permits 44,000. That's okay. Donation is allowable. Bank charges allowable. Then tax consultancy is allowable 30,000. So that is all about it. So remember this 125. The present amount for depreciation. So hapo ameandika the word expenditure, you correct. 7113, 7313 plus 125 plus 60 plus 800 plus 44 plus 30. So that is 72,000. Now we are supposed now to less non-taxable income. So we less non-taxable income. So we are supposed to less all the non-taxable income, and the only non-taxable income that we have is dividend from quoted company. Dividend quoted company. Dividend from quoted company wanatuambia ni ngapi? 40,000. And then we have discount received. Sales of milk ni taxable. Discount received taxable. Profit on sale of shares. Profit from sale of shares. Profit from sale of shares. Ni ngapi? Profit from sale of shares is 100,000. 100,000. So minus 40 minus 100. 8232. So that is the taxable income. Then tax payable. Tax payable, it will be 30% times 32,000. There was no any withholding tax or any direct. there was no any withholding tax. So 2,469,600. So there was no any withholding tax. So that one becomes the final tax. That one becomes the final tax. We can also do the next one, another one. I don't know if you have another question for cooperative. So first, sijaona any question for cooperative. Let me see. So sijaona any other question for cooperative. So mingi ni SACCOs. But in case you find it in an exam, in case you find a question for cooperative in an exam, that's how you handle it. That's how you handle the question. So let us do SACCOs. SACCOs. So I think that is all about it. So we shall look for another question later, but I think we should try for SACCO. SACCOs. SACCOs. So SACCOs. So let us see taxation of SACCOs. So these are cooperative societies. So these are cooperative societies. Cooperative societies. Where members saves and get credits. Where members saves their money and gets credit on loan and gets credit on loan and other facilities. So as you can see, this is a bit different from the normal cooperative society. So the normal cooperative, they buy goods and resell them on behalf of members. But in case of SACCOs, the members save their money and they can get loan from they can get credit from the money that they have saved. Now, that is taxable income for SACCOs. Taxable income for SACCOs. The first taxable income is the 50% of gross. So underline the word gross. Interest income from non-member. Interest income from non-members. So underline the word gross and non-member. So underline the word gross and non-members, i.e. Bonus, treasury bills, interest from fixed account. So interest from fixed account, interest from savings account. So interest from treasury bills, interest from savings account, interest from fixed account, interest from bank, etc., etc. Number two, and then we say NB, interest from members, interest income from members are exempt. So that is okay. So interest income from members, they are exempt. So you need to know that all those are exempt. Number two, 100% of gross income from non-qualifying dividend. Non-qualifying dividend. So now all the non-qualifying dividends are taxed at a rate of 100% for SACCOs. They are taxed at a rate of 100%. Number three, or number C, 100% of gross. Underline the word gross. Underline the word gross of net rental income. And you say NB and net rental income is equal to the gross, is equal to the rental income itself. Rental income, you less allowable expense. Number D, so that's all about the the rental income. Then we have 100% of the gross income from FOSA, of gross income from FOSA. So remember we have FOSA and you have BOSA. So FOSA and BOSA. So what is FOSA? So FOSA means front office. It means front office, savings account, saving activities. And you say this involves the core business activities of the SACCOs. This involves the core business activities of SACCO. Then we have BOSA. BOSA. So let us talk about BOSA. Means back office. Back office saving activities. Savings activities. This involves non-core business activities. This involves non-core business activities of the SACCO. So we have the front office. So the front office is where you go and you get the service just at the desk. But you have other services that you get, but not through the desk of the SACCO. Now, for example, for FOSA, a good example of a FOSA is credit card. So the staff can give you a credit card. So there is an expense that you incur to get the credit card. So you pay to get the credit card. That expense that you incur is an income to the SACCO. That expense is categorized as front office. But remember, there are other activities which cannot be categorized as FOSA. And then we have ATM withdrawal charges. ATM withdrawal charges. So the same card, you use it to withdraw to withdraw money to the nearest ATM of that SACCO, and the SACCO will charge you an interest or the cost of withdrawing that amount. That is a FOSA. But now let us assume you are going to take a loan. Now when you go to take a loan, you shall be given a paper to that has the details, then you have to sign and you pay the processing fee. That processing fee is not the main activity of the SACCO, and therefore that one can be categorized as BOSA. So i.e., in this manner you can have loan processing fee. So that's a good example. Remember, FOSA is 100%, but BOSA is exempt. So remember, BOSA is exempt. So remember, income from BOSA is exempt, or it is non-taxable. Cannot be taxed. It's non-taxable. Then the last one, 100% of any other taxable income, which is received by the SACCO, which is received from a SACCO, which is received from a SACCO, that one will be 100% taxable. That one will be 100% taxable. That will be 100% taxable. I think hiyo tumemaliza hivyo. We can look for a question and do it. Let us look for a question to do. Now, before we do a question, all expense under SACCOs, NB, all expenses under SACCOs are disallowable. So all the expense in SACCO are disallowable. Whether is any what or what are disallowable. So all the expense are disallowable. And then, except from dividend. As follows. So let's see. So which kind of dividend is allowable? We say dividend from SACCOs are allowable if dividend from SACCO are allowable and it shall be lower of number A or number B. You pick the lower of actual dividend paid or the 30% of taxable income, whichever the lower. So you pick the lower of. So whichever whichever figure is lower. Now I think we can look for a question before we progresses. We shall do several of them. We shall do several questions, and we can start with a question for which sitting. Let us start the question for November 2016. November 2016. So let us do that question for November 2016, number 3C. Wanasema Jambore SACCO Society reported the following income expenditure for the year. So we have the income, then we have the gross rental income. So we need to start with the net. So that is right. Jambore SACCO Society Jambore SACCO Society, computation of taxable income, computation of taxable income for the year of income. So the year of income is 2015. 2015. So we start with the income. So hii swali tunaanza na income. So we start with the first one is the gross rental income. Remember, we need to have the net rental income. The rent net income. So how do we get the rent net income? So we have the gross 840,000. 840 minus, we less all the allowable expenses relating to the rental income. So parity, we have expense. Repairing of rental property 156, that's allowable. So repair and maintenance is allowable. Then we have another expense that is legal expense relating to rental property 72,000. 72. So we shall get the net. So let us add it. Let us find the figure. 840 minus 156 minus 72. This is 612. So to make it in thousand. So our question is in thousand. Number two, we have interest from savings account. So we said that interest from savings account is 50% taxable, 50% taxable. So interest from savings account, 50% is taxable, times 160. That I think is 80 shillings, 80,000. Interest from member loan is exempt. So interest from unaandika tu interest from members exempt. But remember, interest from non-member. Remember we said that interest from non-member was 50% taxable. So from non-members, tulisema ni non-members, if you can remember, is 50% taxable. But we say that interest from members are exempt, so like a dash. Then you have interest from fixed deposit account, 50% also. Interest from fixed deposit account, from fixed deposit account, we said 50% times 560. This is 280. Then you have interest on treasury bill, the same. Interest on treasury bill. Remember, it's supposed to be gross. Interest on treasury bill. 50% off. Remember, we had something pale chini to do with the treasury bill. Yangapi ya 114,000. Interest on loan. So remember, we need to deduct that one. So 435 minus that one. 435 minus 114. Then you multiply with 50%. So how much will that be? How much will that be? Itakuwa 160.5. 160.5. 160.5, is that correct? 160.5. So we add it together. So I get 1,132.5. Then now we can less the dividends, which is allowable. So less allowable deduction. And you pick the lower off. So dividend is only the dividend which is allowable deduction. So you pick the lower off. Number one, the amount that was paid amount, which is 98,000. You are supposed to pick the lower, and then 30% of actually set limit. Set limit ni 906,000. Na mwingine ni 980. Haya. So dividend declared was 980,000. Set limit is 906,000. So it's supposed to be 906 actually, not 30%. So enda pale utoe hiyo 30%. But I think 30% is also applicable. It is 30%, yes. So just pick 30% of this amount. So tunasema, so it's supposed to be in thousands, so 980. So our question is 980, 906. So the number is 906. So 0.3, 30% times 1,132.5. So 0.3 times 1132.5, of which imekata kuleta. Anyway, sawa. Or is it 30% or 80% actually? But let me confirm. You see when you are the wrong information. Just a minute, let me confirm. Copy nini yangu, my book hapa. So tulisema that our tax, we compare the two. It's supposed to be 80%. It is supposed to be 80%. Supposed to be 80% as a set limit. 80% as our set limit. So 80% times 11, that's 2.5. Yes, 80% as our set limit, so that we get the taxable income. So tunachukua 1132 minus 906. 1132. So 1132.5 minus 906. So 226.5. So kumaanisha our tax payable itakuwa ni 30% times 226.5. So which is 0.3 times answer. So the tax is 67.95 Kenya shillings. Remember it is in thousand. So that's how you are supposed to do that question. We can do for December 2021 also. December 2021. December 2021. The question number 2A. Number 2A. December 2021. December 2021, question number 2A. Hizo zingine nyinyi ndio mtafanya. So let me check December 2021, question number 2A. December 2021. Question number 2A. 2A. So msanii SACCO. So nimepata hiyo swali. So the question, you can use the gross profit method if you want, but the requirements required adjustable profit and loss for the year that was December 2020. Hint, start with the reported profit. Now, because the exam ametuambia tutumie reported profit, we shall use the reported profit. So we say Musani SACCO. Musani SACCO. Computation of taxable income. Computation of taxable income for the year of income. The year of income is 2020. 2020. So we have to start na tuanzie na reported profit. Reported profit. So kama kawaida we start with the reported profit. So tunaenda pale juu. Our reported profit is 19,140. 19,140. I think this question is in thousand, if I'm not wrong. Yes, it is in thousand. Now we are supposed to add back disallowable. We said all the expenses are disallowable. So add back disallowable expense. So apart from dividend, all the other expenses are disallowable. So tuanze na office expense. So office expense wanatuambia ni ngapi? Office expense wanatuambia ni where is it? Office equipment wanatuambia ni 50. Sorry, okay. Office equipment, information number 1, you have salary to SACCO's employee. Employee ngapi? We add it back 1200. Salary to caretaker or what? Yada ushughuliki, unaweka tu kuweka 200 of purchase of office computer. Purchase of office computer 400. Purchase of office computer is 400. And then what else? Tumemalizana hiyo. So na inafika kwa hiyo 56. Let me see. Tukichukua 1200 plus 200 plus 400 inafika, haifiki nini? Haifiki pale juu office expense 5600. Haifiki, kumaanisha we need to have office expense ni 5600, tuna minus ni tumetoa. So tumetoa 1800. Ukichukua 1200 plus 200 plus 400 hiyo, so 5600 minus answer is 3800. 3800. Haya, and ignore the salary for caretaker. Hii inaenda kwa, ignore this one. This one itaenda kwa rental income. Remember rental income, we're supposed to get the net rental income. How to get the net rental income? Tunachukua rental income tuna minus the allowable deduction, and one of the allowable deduction is the caretaker salary of the property. So this one relates to the property, so it tunatoa. So kumaanisha hapa ni 1600. Supposed to be 1600. Hapa itakuwa ni 3000. Supposed to be 3000. Hapo tulikuwa tumefanya makosa, but ni sawa sawa. Now we have other expenses. Tunasonga mbele sasa. We have general. Okay, before we general expense. So general expense include depreciation of 484 and an performing loan to member of 620 were written off. All those are, so tunaka to general expense. Zote ni disallowable. General expense. So general expense hiyo yote itakuwa disallowable because they said there is no, so the only allowable expense in that case is dividends. Haya, tumemaliza na hiyo, tuende huko juu. We have bad debt 60. Bad debt 60. Bad debt in 60. Then we have what? Repair of the rental property. What do you think about the repair of the rental property? Hiyo hatutaweka. Hiyo inaenda kwa nini? That one goes directly to the rental income. Hiyo tunachana nayo. So we less non-taxable income. Now we can less non-taxable income. So non-taxable income, the first one is interest on loan from member. We said it is non-taxable. Remember we said it is non-taxable. Hapa tukikuja hapa, so hapa utiliweka dash kumaanisha it is not taxable, it is non-taxable. It is non-taxable, so inakuja hapa. So interest on loan from member is not supposed to be taxed. So we less, haifai kutaxiwa. So interest on loan from member haifai kutaxiwa. So hiyo ni ngapi? Naona ni 16,200. 16,200. Next we have interest on treasury bill. Now interest on treasury bill ndio hii hapa. 50% is taxable, meaning the other 50% is not taxable. It is not taxable. So the remaining. So interest on treasury bill, we know that 50% is taxable. So kumaanisha the remaining 50 is non-taxable. So ya ngapi? 3,200. So times 3,200. So that's 2 divided by 2, which is 1,600. And then we have interest from infrastructure government bond. That one is exempt. That one is exempt. So kumaanisha it is non-taxable, not taxable. So full amount interest from infrastructure bond. That one is 100%. Or is it 1,000? Not 1,000. It's 18,000. 1,800. So that one is. So that is non-taxable 100%. Non-taxable 100%. So huyu na ule wa juu, they are 100% non-taxable. So interest on loan from member and interest from infrastructure bond are non-taxable. And then interest from bank is 50%. Interest from ABA bank 50%. Interest from bank, tuliweka kwa bank kubwa 50% of how much? 1,500, which is 750. Then you have rental income. So hapo ndio inaingilia. So rental income. Unachukua hiyo figure. Remember we need to get that 200. Less the 200. Nakumbuka 200 ndio hapa. Nimesema tuvute caretaker something. Then we add information number what? Repair on the rental income 1,300 pale kwa expenditure 1,300. So ni hizo tu. Nothing else. So that's 200 minus 200 minus 1,300. That is 1,700. That one. Okay. That one naona kama tutaweka. That one is taxable. So hiyo tutaweka. Hiyo toa. Hii inafaa kuwa taxable. So nimeshachora hivyo. Nakuja na hii hata na inafaa ikuwa hapa. So this one is taxable. Inafaa ikuwe kwa hii hapa. If you are starting with the gross profit method, unaweka rental income as taxable. So pale haitakuwa. Then we have dividend from mazao SACCO. So we said any dividend from any amount of money received from any other SACCO is 100% non-taxable. So we say it's 100% taxable. And also from cooperative. So zote mbili, they are 100% taxable. So tuanze na kwanza. We have dividend from mazao SACCO. So that's an income from mazao. Dividend from SACCO. So tusema any dividend from SACCO is 100% non-taxable. So full amount 1,000. And then the other one is 600. The other one is 600, which is from cooperative society. So dividend from cooperative. So taxable income. You can get your taxable income. Then you can calculate the tax payable. tax payable, which is 30% of that amount, which is 30% of that amount. So I think hiyo haina mambo. We can see, let us compute 19,140 plus 1,200 plus 400 minus 3,000, so at the minus, sorry, plus 300 plus 1,400 plus 60 minus 16,200, 1,600, 1,800, 750, 1,600. Now by 3,250. 3,250. Then times 3,250. So napata the tax paid. So that's all about it. So I think hiyo haina mambo. That one. So tax wametuambia 25% actually. So tax rate wametuambia is 25%. So times 0.25. So you're supposed to pay a tax of 12.5. So the tax that's supposed to be paid is that amount. That one is fine. So I think we can look for one more question, then we finish. So let's do April 2023. That will be our last question. April 2023. April 2023, question number 4B. Number 4 boy. So April 2023, question number 4 boy. 4 boy. So let's do this question together. So tusaidiane, SACCO, computation of taxable income for the year 2022. For the year 2022. That's our focus. So let me read the question as we do, as tunasoma tukifanya. So Saidiane SACCO is a deposit taking cooperative society. The SACCO has been cleared. The SACCO has a clear separation of back office BOSA and front office BOSA. So we have the interest income. So tunaanza na interest income. So kama kawaida we start with the interest income. Now remember interest income. Remember for BOSA is 100%. So remember for interest from BOSA, sorry, from FOSA is 100%. So unaandika FOSA. Remember it's 100% amount. So how much is that? 820,000. 820,000. So kumaanisha hapa ni ngapi? 820,000. And then from BOSA, remember it's exempt. So remember from BOSA is exempt. Now, commission received via Visa card FOSA, iko sawa. Commission via FOSA card. That one is 100% taxable, 80,000. 80,000. Rental income. So rental income tunaweka, already wametuambia ni net. Net rental income. So that one is direct also, wamesha to minus here. 30,000. So me natumia gross profit method. Aya. Dividend from cooperative. That is 100%. Dividend from cooperative. From cooperative. Cooperative. 100% on the gross amount. So hapa ametuambia it is net. So kumaanisha that amount will represent 375 represent 85%. What about 100%? What about 100%? Itakuwa ni ngapi? So 78 375 times 100 over 85. Unaweka hapo. So we say that the dividend, we say, well, let me go back. So we say dividend from cooperative societies are 100% taxable. That one is fine. From SACCOs, we are in short, on the and cooperatives. SACCOs and cooperative. So they are yeah, itakuwa. This one is just a moment. Let me see. This one is supposed to be non-taxable. This one is non-taxable. Suppose it's not supposed to be there. So that one is non-taxable. That one is non-taxable. Remember, we are putting the taxable income. So you're not quite very keen. So that one is non-taxable. Let me go to the next one. Foreign exchange gain realized. Foreign exchange gain realized. Pale chini, information number 1. Foreign exchange gain realized and other operating income were a portion equal from BOSA and FOSA. So tuna divide by 2. So foreign exchange realized nusu nusu. Tunasema foreign gain realized, information number 1. So nusu ni FOSA, the other one is BOSA. So nusu ni 80,000. The other half, 8,000, is exempt. Aya. Capital gain 9,000. Capital gain 9,000, hiyo tunaachana nayo. Tunaenda kwa the other one. Capital gain is that one is non-tax. It is supposed to be non-taxable, but we have operating income. Half is shared. So I say information number 1, FOSA and BOSA wanachukua nusu nusu. So we say BOSA. So ngapi? 23,000 divided by 2. That one is around 11,500. So 11,500. But for BOSA, is exempt. For BOSA, is exempt. Administration expense is not a nikelele. Administration expense tunaachana nayo. Salaries and wages tunaachana nayo. Interest on deposits tunaachana nazo. All those are the expenses. So interest on deposits is an income. Interest on deposits. On deposits. So we have BOSA and FOSA. So BOSA exempt, but for FOSA to 80,000 is taxable. Salary and wages and expense we ignore. Insurance expense we ignore. Allowance for doubtful debt we ignore. Asset impairment we ignore. Repair and maintenance we ignore. Computer printers we ignore. Softwares we ignore. Furniture and fitting we ignore. Audit fee we ignore. Motor vehicle we ignore. Rent we ignore. Interest on loan. FOSA and BOSA. So hapo we have interest on loan. Hiyo ni expense kwa sababu tunalipa. We are paying. We ignore. Information number 1 tumeshafanya. Information number 2 tumefanya, which is irrelevant. We don't need it. Not included information provided is purchase of Toyota van of 2 million to be used for SACCO. No, that one is WTA. We less WTA. So saloon car, which is 25%. How much per saloon car? Hiyo saloon car inakuanga ngapi? Saloon car. Yes, saloon car. Let me confirm. Yes, 25%. So 25% of how much? So that was not included. Hiyo tunaweka peke yake. Hakuna kitu kingine. Or maybe you can look for the others huko juu. Computer software, computer printers, furniture and fitting. So WTA is allowed. For WTA you can allow. So we have computer and printers. And printers, which is also 25%. Computers and printers is 25,500. Yeah, software 12,800. Software. Then our furniture, which is 10%. The last one, furniture 12,800. Na hiyo imeisha hivyo. 12,800 is 12,800. So we can list the amount so that we can get the amount of tax to be paid. So 0.25 times 25,500, which is 63.75, and then 12,800, that's 200, and then 0.25 times 2,000. So eka in thousand, supposed to be in thousand. Tusije tukaji confuse. 500, and then times 25,500, 63.75, then 12,800, that's 200, and then your 12,800. So ziko zinafanana, 12,800 na 12,800 ziko same. Software 12,800 na furniture is 9,700. 9,700 is 970. So 0.25 times 12,800, that's 200. So huyo na huyo moja atoke. So total taxable income so inakuwa ni ngapi? 820 plus 80 plus 30 plus 8 plus 11.5 plus 280 minus 63.75 minus 3,200 minus itakuwa ngapi? So the amount of tax payable, so we can now pay tax payable. So tax payable equal to 30% times 12, 18,455. So times 0.3. So if I put tax at 365,536.5. So that's the amount of tax to be paid. That's the amount of tax to be paid. Amount of tax to be paid. So assignment August 2024. So assignment August 2024. Question number 4C. So that's your assignment. Kindly try that one. August 2024, question number 5C. Then we have other assignments. We have other assignments, which is December 2013. 2013, question number 3. We also have December 2009, question number 5B. We also have December 2006, question number 5C. Ni ndogo ndogo hizi. Those are enough. So we are going to start from insurance. Insurance, both general and life assurance. So general insurance and life assurance. General and life assurance. So that is where we are going to start in our next video.